Mark. Yeah, so we've been talking today already. The Aflacs of the world, a few of these different stocks that Matt was talking about, they're all tied fundamentally speaking, right? And so, the ones that have had good earnings and are consistently making money, they're the companies that are fundamentally solid for the most part. And so fundamentals do matter. There's no question about it. And this is the conversation we've been having for a few months now. Every week I try to kind of pick something that we can add to our repertoire to see, is a company good, bad, or indifferent. Last week we were talking about cash operating margins, cash operating profits, basically, if you will. This is a metric of painting a picture, an overall picture of a quality company. Okay, you can weed out the companies that are fluff from the companies that are substance, and that's really what we're doing here. And so this week I'm bringing one more concept that's going to add to this picture. So it's like that guy that did all the paintings. What's his name? Bob something or other. Anyway, we're painting a picture here. Are we painting a picture of a decent company or a company that's maybe struggling? And all the metrics that we're giving you, you can use them in conjunction with one another to, like I said, build yourself a picture. How really does this company look overall? And that's really what we're after. So this week we're going to talk about EBITDA, everybody's favorite thing. If you don't know what EBITDA is, it's EBITDA. Basically, it means earnings before interest, taxes, depreciation, and amortization. So what does all that mean? Well, it's just a measure of an overall company's financial performance. It's basically telling us, how is this company doing? There's a lot of metrics you can look at. You can look at net income. You can look at gross profits. You can look at revenues. You can look at sales. You can look at a lot of these things. Well, why this one? Well, there's certain things that happen in companies from an accounting perspective. Okay, so some of us will call it voodoo. Some of us will call it just different perspectives. Whatever your feeling is about this, the thing is we need some metrics that are subset of or separated, I guess is a better word, separated from the number that we're throwing at us, right? So looking at net income can mean a lot of different things. It's definitely okay as a company making money, right? Net income's an important number. I'd like to look a little bit deeper, and this is where EBITDA comes in, because it is different in net income in the fact that it tells you how potentially efficient a company is in making money. And I'll get to that in one moment. So again, it's just a more precise number of corporate performance, which is what we're after, right? How good is this management team? How good is this company at making widgets, right? Are they making money on widgets, right? If they've got lots of sales and revenue, but they got no income, then they're probably not that efficient, right? Now, EBITDA, like I said, earnings before all these other things get involved in there, can be an important number. And it's very important when we start comparing three different metrics: gross profit, EBITDA, and net income. Okay, because those three numbers are very different for every company, and there's a trending part to it. There's an individualistic part to it. There's a part where we can compare company to company and company to industry average as well. Okay, so again, EBITDA just takes out the accounting and the financial deductions, if you will, and gives us a more pure number. So at the end of the day, that's what we're looking for. So if we start to compare these things, let's bring up my favorite website when I'm looking fundamentals. I just go to Yahoo Finance. It's free. It's easy. You can go there, and all of these numbers that we're going to look at today can be found on the income statement. Okay, so if we go to the Coca-Cola company, I'm just on Yahoo Finance here. I go to financials. We do this every week pretty much. Okay, and we go in and what pops up first is the income statement. Okay, this is what we want to look at. We want to look at some numbers here, and we want to compare company to company. Like I said, you can go to Finbox and find the industry average, but I think it's more company to company is probably the more important thing here, especially if we're evaluating which one we want to invest our money into, which is pretty much what the art of fundamental investing is, right? So when we start looking at this, there's three numbers that I want to look at here. Okay, the three numbers, like I said, is gross profit, right? So this is Coca-Cola, by the way. and we're just going to talk 2020 numbers here, okay? This is the numbers ending December 31st. So gross profit for Coca-Cola was almost 20 billion, 19.5 billion. Okay, so gross profit, oh, that's good, right? Well, yeah, they're making money. Okay, it's actually a little less than 2 previous years, but not quite as much as the trailing 12 months. So, you know, maybe just an anomaly for Coca-Cola. Well, gross profit doesn't tell us the whole picture, because if we didn't take into consideration expenses and things like that, well, at the end of the day, you know, we wouldn't know if they were actually making any money. This brings us to our net income. If we go down to our net income number, so they made 19.5 billion, but they actually only made actual dollars 7.7 billion or 7.75 billion. Okay, so what does that tell us? Well, they had a bunch of money, they spent a bunch of money, and this is what they got left over. Is that number important? Absolutely. What I want to know is, I want to dig a little deeper before they do all their accounting tricks to come up with this net income. And when I say accounting tricks, don't get me wrong, there are just different ways. There's GAAP accounting principles, and there's accrual accounting. There's lots of different accounting. I want to know what the numbers are, what the pure numbers are. And this is where our EBITDA, our earnings before taxes, interest, taxes, depreciation, and amortization. So we're looking at 12 billion, 12.7 billion here. Okay, so that's a more precise number than the net income, and more precise than the gross profits. Okay, so that's giving me an idea of what their straight up earnings are. Now, what does that mean to me exactly? Well, I have to have that to compare to something. So we've been using Coke and Pepsi, you know, the old Pepsi challenge here. So we're going to continue with that. So let's look at we'll compare those numbers for Coke to Pepsi here. So Pepsi in 2020 had gross profits of $38.5 billion. So they had almost twice as much gross profit as Coca-Cola. So if you just looked at gross profit, you'd be like going, wow, these guys are killing it, right? Well, that's only one number. Let's look at some more here. Well, look at their net income. At the end of the day, they only made 7.1 billion, whereas Coca-Cola made 7.7 or 7.75 billion, right? So those two numbers. But now let's again drill down. So Pepsi had gross profits of 38 billion, but their EBITDA was very, very close. Their earnings, their actual earnings before all that stuff, was 12.7, which was very close to Coca-Cola. The key to look at this here, though, is they had, you know, twice the gross profit, and yet they only came out with very similar numbers to Coca-Cola when you start to break those numbers down. This is why this is important. EBITDA is an important thing, because we can start comparing EBITDA to sales numbers, to revenue numbers, to EV numbers, all these other numbers. We can compare this, but it's important to have this number, and it's important to see how efficient the company is at making money. And in this particular case, Pepsi took a lot of money in, but their output wasn't quite as good, or maybe just slightly better when it comes to EBITDA than it was Coca-Cola. So if we extrapolated that and said, okay, let's go back to Coca-Cola for a second, and we extrapolated that and said, okay, well, what if Coca-Cola had made twice as much as they did, right? If they'd have doubled this number, would they been able to do, well, they actually did a little bit better there. Would they have been able to make more income here? So these are why these numbers are important. You have to break down the overall numbers. If you're just doing a quick review of a company, that's fine. You can look at just the net income and gross profits or sales and get a quick bird's eye view. But if you really want to break down something to know how efficient the company is, how good the management team is, you got to delve into these numbers, and EBITDA is a very good way to do that. So again, it's this comparison that can give you the bird's eye view of what's really happening inside these companies. So try looking at EBITDA, and obviously look at the trending of it as well. So the trending of things matters, right? When I look at net income, I want my net income for the most part to be going up. Well, Coke had a good year here, maybe not so much in 2020, but in 2021 or the last trailing 12 months, they're doing much better, right? So I want to see those numbers going up. Ideally, I want to see the same thing with EBITDA, right? Or EBITDA, whatever you want to call it. And so you can look at those trending lines as well. And it's just like anything else. If it's trending in the right direction, not going up all the time, but trending in the right direction, then that's where I'm bullish on a stock if I'm looking at a chart. Well, I'm doing the same thing with fundamental analysis. I'm looking to see, are they trending in the right direction? Matt had a good point today. When Matt was talking about those earnings numbers, he's like, look, companies got to grow. That's what they got to do. Facebook didn't grow that much today. They got beat up, right? So it's important that companies can prove that to us as well. And EBITDA and net income and gross profit are three good ways to compare some results. So that's your fundamental focus for this week. Get out there and check these numbers out, and you'll get a very good feel for how good companies truly are.